Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented as always by Tusk Media. Tusk Media. I'm Garrett Palmer, as always in the morning with Ben and I. How are you doing this morning?
I'm doing well. It's a big day.
Yeah, big day. A lot of excitement. First, check out our Movember page. We're raising money for men's health. I'm stumbling this morning. We're raising money for men's health. They've been calling me Bearded Barrett. I've heard the chosen one around the office for me. I'm not really sure where that's coming from.
I don't know. I have to say, so Bill Belichick sent this big letter to Donald Trump last night. He read it apparently. So that's why I'm holding the football, because people are saying that the more beard I grow and the more beard Bill Belichick grows, the closer we look to each other. So I'm really trying to look like a patriot today. So I got my football, got my Bill Belichick beard.
A lot of connections there.
Yeah.
I like it. All right, we are going to jump into a stock this morning that absolutely tanked after market closed yesterday.
Yeah.
Hertz Holdings Corporation. Is that what it is? Hertz Holding Corporation. So let us know why. I think it was up to 35%.
35% down.
Down. Yeah. Sorry. So let us know what we're seeing there. Why it took such a big hit.
Yeah. So Hertz is obviously the big rental company, yellow. So you'll see in our charts that we have, it's always the yellow line. It's a very consolidated industry. So part of the thesis for the rental car companies, and something I really bought into at the time, was that there's this massive consolidation in the rental car company, similarly to the cruise lines, similarly to the airlines. Problem is, they all have these different brands. So Hertz also has Dollar, it also has Thrifty, Avis has Budget. So there are multiple different brands, and they're all designed to operate independently of one another. So even under the Hertz umbrella, you have Dollar and Thrifty and Hertz all competing against one another on price. So in an industry that's so consolidated, when travel's generally doing pretty well, you're actually seeing that rental revenue per day is down. So that's not a good sign, and it's not good for margin.
Yeah.
And so when we look at margins relative to Hertz, we want to see an continued upward trend in gross margin, because when you have a thesis, the way I like to look at things is, it's great to have a stock price and a target and a downside stop. So if you hit the stop level, you just get out and say my thesis was not correct. I like to have a little bit of a subtle take on that. So when I have an investment thesis, I have my points of why the thesis is going to play out and how it's going to play out. And to the extent that those points are not being hit, and to the extent that those are being outright denied and contradicted, then I have to say, okay, well, my thesis is correct, and then you follow the logical progression. If the thesis is not correct, then the idea is not correct either. Right. So that's the problem you have with Hertz. It's also the problem you have with First Solar, gross margin. In the place where they have a technology advantage, they should be able to see gross margin increase. They're seeing gross margin decline. With Hertz, consolidated industry, pricing power, you should see a gross margin increase. You're seeing gross margins not really do much. And in fact, at the operating level, you'll see operating margins continue to remain weak. So when I look at that, I say, the bullish case for Hertz is not there. Yeah. And today we're seeing just another stone drop for the yellow car company.
Yeah.
So I know you have an investment in Hertz.
Yeah. I privately, outside of Norwell, I do.
Right.
Unfortunately.
So what was your thesis kind of going into it?
I bought it about a year ago, or maybe 15 months ago, or something like that, and it had just been tanking and tanking and tanking. And I was a lot dumber then. I was still in college. I was kind of cocky, like, oh, this thing took a dip. I'll just buy it at the dip. And it's, a big company, and Carl Icahn had just upped his stake in it at the time. Right. So I don't know. It wasn't as in-depth as it should have been, but Just
So one of the ways you can figure out, in addition to the gross margin piece, you say, okay, well, Hertz has underperformed, so there's going to be some reversion to the mean in Hertz. So we have the stock price of Hertz versus Avis Budget, their big competitor, and if you look at the two, it's clear that in 2013, Avis Budget really just took off relative to Hertz. That's when Hertz had all sorts of accounting problems. They didn't release financials for a really, really long time. And it just kind of quarter after quarter after quarter, and they're like playing catch up, because what happened is they brought in a new CFO. They moved the headquarters, brought in a newer CFO. The new CFO comes in and says, your guys' accounting is just terrible. You're not doing the right thing on the depreciation side. Your depreciation is way too aggressive. You're not going to be able to get these residual values. So you pile that all in, and the EPS that Hertz was reporting was totally false, because they had this false, very low level of depreciation. So that's another element you have to test when you look at a stock. So if you're testing depreciation, for instance, you want to look at what are they actually getting when they sell a vehicle versus what are they paying, and how long is that process taking. And what I was finding is that there was so much portfolio change. They were buying so many vehicles and selling so many vehicles that it was difficult to discern exactly how much they were getting and how much they were paying on a per vehicle basis. But you could kind of back into some of that, and there was a discrepancy between that and the depreciation. So that was a big issue for Hertz, and it seems like they're still continuing to have that. One of the big things in the conference call in the earnings release was that, again, they're complaining about residual values. But that argument makes absolutely no sense. Avis Budget just beat earnings just last week, and now Hertz goes down 35%. So it's not an industry-wide thing. You can make some claims about weak consumer spending in general, but to say that everyone is getting hit by that is false. Avis Budget, they were up on earnings. So what Hertz is saying is there was extremely aggressive accounting. And that's always very difficult to unwind, because it takes a long time to unwind that. So for evidence of strong residual vehicle pricing, the best place, and the place where all analysts kind of go, first stop shop, is the Manheim used vehicle value index. And that's sitting on all-time highs.
Wow.
So for Hertz to complain about residual pricing doesn't make a ton of sense. I mean, they're also saying some stuff about mix, so we'll give them some credit there, but nevertheless, that's not a good sign. They're just continuing to obfuscate the truth rather than coming out and saying, we have issues, and resetting the bar. And I think they feel bad because they've had to reset the bar so many times. So it has that issue.
Do you think that their next best course of action would be to replace mismanagement? Do you think they have too much of a track record thus far of just doing stuff like this and not really making sense?
It's difficult because there has been a lot of management change already. If I were running the company, I would not run 3 or 4 independent rental vehicle companies. I would collude within the organization, obviously, not with competitors, but I would price collude within the organization such that, you do have a value proposition with the dollar and thrifty lines, and you do have a premium value proposition with the Hertz lines, but those should not compete against one another on price. You should not see Hertz pricing erode because you're competing with it with your own brand.
That's so strange. They're just kind of setting up walls for themselves. To have to jump over.
So that's a big issue. Now, is Hertz to sell now, down 30%? If I was a holder of it, which I'm not, so I don't really have any skin in the game in this scenario.
Lucky you.
I would continue to hold the stock because I think 30% down is quite a large discount you're getting in the stock price. Whether or not you have to buy it now, I think good investors would do more research in terms of, is this the last shoe to drop or are there more?
Mm-hmm.
And if you think there are more, then just be careful and always try to figure out where is the management incentive in this. Is management's incentive to completely lower the bar right now? And if so, that might be a good opportunity. If you think that they're going to continue to forestall the inevitable, then that's probably a situation where you might want to watch out.
Right. Yeah, and I know that they've cut guidance on every front imaginable that the company can face pretty heftily. So at least they're being realistic in that sense and not saying that the fourth quarter is just going to be some explosion and awesome thing. So
yeah.
So they got a little bit of reality up there.
Right.
Up top.
All right. Well, that's it for the Hertz thing today. We will have a lot of election coverage today as well.
Oh yeah, we're doing.
So keep an eye out on that. It should be pretty exciting. We're gonna try to look at things a little differently than other people are. I know everyone says that, but here it's a small office, and we're all investment people. So we're going to be coming at it from that end. We're going to try to give you a rational perspective. Obviously, I think we all have our biases.
Right.
So I'm excited about it. I'm excited for it to be over.
Yeah, for real.
And we'll have a new president-elect tomorrow.
It's going to be exciting.
That's incredible. That's the first time for 9 years that's happened. 8 years that's happened.
Yeah.
So
hopefully we're gonna have a YouTube live segment. If not, if we can't get that working, then we'll definitely have a Periscope. So you can tune in and check out what we're up to. Probably nothing good, but that's what we're going to be up to tonight.
you want to watch me become more like Bill Belichick.
Y'all have a good day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.